Hey, it's Will from PaxisTrading. Last week we talked about how to trade the rounding bottom as part of the stock market bottoming video series. Today I will go over what a double bottom is and the psychology behind a double bottom. Make sure you stay till the end of the video because I'm going to show you how to trade the double bottom with a trade that we took this week in my Discord trading room. Now before we start, don't forget to hit like and subscribe. Let's go. If you don't know what the stock bottoming process is, or how and why stocks bottom, you can always go back to this video from last week in which I went over all of them. It's a great place to start as a beginner. All my content is intended to help beginners start their trading journey, so if you're more advanced, please be patient as I work my way up making more content. Okay, so what is a double bottom? A double bottom is a chart pattern that potentially signals a reversal in stock movement. In simple language, a stock is dropping like crap. Then a double bottom shows up. It could potentially bounce from there. Let's look at a chart. We have a stock here that is going down. It hits a certain level and bounces. Then it gets knocked down back to the same level, and it bounces again. Here, you are starting to form a double bottom. Pay attention to the word I just used, starting. Why? Because it does not have confirmation. Only when it gets above this resistance and closes above this resistance, we can call it a confirmed double bottom. You should watch this support and resistance video I made a couple weeks ago to help you better understand why it needs to close above it. Let's break it down. There are several elements that constitute a double bottom. First, the stock needs to be in a downtrend. It means no one wants it. People are just dumping the stock. Second, it needs to have an initial support level from where it bounces. People are finding it attractive again at this price level, so they open their wallets and buy some shares. Third, there is a resistance level where it gets rejected and comes down to retest the support level. We call this resistance level the neckline. Here we still have some sellers who did not get out in time when it drops, so they used this opportunity to offload their shares. At the same time, some short-term traders may also decide to take profit there and move on to the next trade. By now, you have two touch points of this support level, which is the fourth element. The second touch point is not going to be exactly the same as the first one. It can be slightly above or slightly below. In general, I would like to see the second retest higher than the first one. It indicates that buyers can't wait for the stock to hit this level and are willing to pay a higher price for it. When this happens, the stock will have a higher probability of breaking out successfully. You will see this in my trade example later. The last element is the break above the neckline. Sellers there got completely wiped out and buyers are in control. There could be more sellers out there, we don't know. But at this moment, buyers are in control. How do we trade double bottom? There are different entry points depending on your risk tolerance. The most academic way to trade it is to buy when the stock breaks above the neckline. They call it trading with confirmation. But in reality, especially in today's market, if you always wait for confirmation, you might not be doing very well because the market turns very fast. So there might not be enough room to the upside after you entered. Some experienced trader like myself like to get in early. Here is a quick trade we did this week in my Discord trading room. We are looking at the 2-minute chart of NET. C is dropping here, finds a support here, tries to bounce, but got rejected, comes down, retest this level again. Now pay attention. The low of the retest is higher than the previous low, meaning buyers are willing to pay a higher price. And you have two dojis. They signal a battle going on between the sellers and the buyers, making it very easy to trade. As soon as it breaks above the top of the doji here, which also happens to be the pivot point of the previous bounce, I did not wait for the neckline to break because it's so close to the support level. If it breaks, I'll just get out with a super tiny loss. But I could go all the way back up to 64. I'm using 50 cents to bet on over $2 of profit. Risk and reward here is just A+. Can't say no to that as long as you know what you're doing. So we entered the net trade here right at 61.90. It consolidated a little bit around the neckline and then rocketed all the way up to 65.30 in less than 20 minutes. And that's exactly where we took profit. Risk-reward ratio here is almost 1:7. And if you look at the risk as the cost of doing business, you made $3.40 of 50 cents. And that's 580% return. Pretty sweet, right? No matter where you like to enter a double bottom trade, just make sure you understand the risk involved in various entries. If you like this type of content, please hit like and subscribe so that I can help more people navigate the stock market during this difficult time. If you want to get my trading plan and trade with me real time, come join my Discord trading room. Check out my website, PaxisTrading.com. Alright, that's it for today. Have a good one.